shares are you sitting on right now?
Hello, everyone, and welcome to OneShare. As a short reminder, none of what you will hear is financial advice, and this podcast is for educational and entertainment purposes only.
Hi, everyone. All right, we have a lot of news coming from different Bitcoin treasury companies this week, so we'll jump right into it. Let's maybe start with our favorite topic, strategy. And here they had an interesting ATM, in my opinion, where they issued a lot of MSTR shares compared to what they would in the previous weeks, right? So that was one thing. And then they also issued a lot less preferred equity. So that was also interesting to see how they changed this ATM issuance this week. And yeah, I don't know. What do you think about it?
Yeah, I think we still get surprised by what strategy is doing, and it's really difficult to project what the next week will bring, right? Because we've been talking on this podcast in prior episodes about the fact that they're slowly but surely rotating into those preferreds, and for a few months they didn't issue any stock common equity at the market, and we thought they were really gonna try to do less and less of that and let the price expand of the common share. But now it looks like they're very aggressively again hitting the common stock ATM, while at the same time reducing the ATM on the preferreds. Yeah, and to put some numbers behind this, so last week's ATM issuances from Strategy, they issued 470 million in total, and it was about 1/3 the preferred equities combined and 2/3 the common ATM. And we saw this trend. It was actually a record week for the preferred stock issuances, and it was really trending into one direction only, basically, and more every week. And this week it looks very different again, with over 700 million issuance overall, 736 to be exact, and it's almost fully the common stock, and we have 4 million of the 730 are from the preferred equity, so almost nothing basically from the preferreds, and just hitting the common stock ATM really hard over the last week. And this was not really impacting the share price negatively. Actually, it was over the week, it was up anyway, but still it shows that we can never really predict what's going to happen week over week here.
Yeah, exactly. I think there's something that maybe the strategy team wants to create a bit of unpredictability on the ATM, maybe to create some volatility or a bit of uncertainty to the market participants. I thought it was very surprising, and especially exactly with the ramping up of the preferred shares, right? Because Saylor knows very well that those have the one with the most torque. And the last week, the share price action on the preferred shares or the common share wasn't so negative, and I was a bit again surprised.
Yeah, it would be really interesting to understand the conversations that are going on behind closed doors at Strategy, because again, they have full flexibility. They can hit any of those instruments at any time, and it would be interesting to see how they take those decisions, because what we have seen is that they have, especially on Strike, they have a lot of ATM left. And Strike has been appreciating in value over the last weeks. It went from under $100 a share to over $120. And this allows Strategy to issue those at more favorable terms for them, right? Because they can make more proceeds from issuing those shares with lower dividend payment in percentage that they need to give back, right? And we also saw that the higher the MSTR common stock goes, the more attractive Strike becomes, because we have this convertibility at the $1,000 share price. And the closer MSTR gets to $1,000, the more attractive or the more certain it becomes that the Strike shares will be convertible. This, combined with the high ATM issuances that they're able to do, they can go up to 21 billion in Strike ATM. So I would have thought that he would let the common stock price rise to be able to make Strike more attractive and be able to issue those shares. So I would have thought that strategy would try to get the price of MSTR go up so that they could hit the Strike ATM harder. And maybe this is still something that they plan to do in the future. But for now, they seem to put more weight on the common ATM and accumulate Bitcoin at those prices today. So it was surprising, but yeah, with strategy, you never know.
And now that you're talking, there's another aspect to consider as well, right? It's the leverage ratio. So obviously hitting the common equity helps that to get a lower leverage ratio so that you can keep hitting those preferred equities as well. But they still have a fairly low leverage ratio as of now, right? What kind of came up to my mind as we were discussing now is, what if this change or this sudden change comes from their new preferred equity, STRC stretch, which we will talk in detail in a bit. But the way that it functions, I think this could be their new main preferred equity that they want to hit. Because as again, we will discuss this in a bit in detail, but because they will have a bit more control over the dividends, right?
Yeah, I think that makes sense. And I mean, you could look at it also that they want to have a repricing of the preferreds as well before they continue to hit the ATM on those too much, because probably it's still too attractive. The yield is still too high. If you look at the risk reward ratio on those, and they don't have a credit rating today, right? That's the first part of the issue, but maybe they're waiting to get a rating, and then they would get repriced and be able to have a even higher torque than they would today.
Exactly. And that's exactly what I wanted to hint at, because based on looking at the different preferred equities, that's probably the first one that could get a rating stretch, so STRC. And once they have a rating on this, then the other things kind of follow, right? It's like a snowball effect. And once you have the ratings of the other ones, then the other ones get repriced at a proper, they get repriced properly, and then they can issue more of those, because the drop suddenly kind of makes more sense, or the drop of the ATM issuance from last week suddenly makes more sense, because they already had this new instrument that they knew that they would roll out, and they already mentioned that they would roll out an ATM right off the bat as well. So I think now suddenly this change of ATM makes sense. Yeah, at least to me, to some extent.
Yeah. Look, I mean, I'm sure they know what they're doing, and they have more information than any of us. But it's interesting to speculate about it. And anyway, you turn it, it seems like it's bullish.
Yeah, I mean that's the crazy part, is that everything is always reflexive, right? Whatever they do, it's really building this foundation to reinforce the rest of the other instruments. So yeah, but yeah, it is speculation from my part. Let's be clear about this, but that's what my thinking got to as we were talking now.
But exactly, hitting the common stock ATM, really, it reinforces, it deleverages them, and it makes the preferreds more attractive over time because they're more collateralized by the Bitcoin on the balance sheet, right? And at the end, we gave you the numbers last week of this big ATM week. This week is even bigger with over 700 million. And just to put that again into perspective, what it means, that the market was open 32 hours. They raised 22 million per hour, or 380,000 per minute, while the market was open last week. And there's another 6,220 Bitcoin that are now in their treasury, and that will never be sold, and that are just off the market. So we're continuing to see this movement of coins from weaker hands to stronger hands, and at a super rapid pace. And as we mentioned already last week, they're just an order of magnitude higher than all the other Bitcoin treasury companies here with their weekly purchases. It's kind of crazy.
Yeah, absolutely. I mean, they're basically ahead of any company, but also ahead of any nation state. considering that they're issuing debt instruments and all sorts of debt instruments, they're now competing with governments. They're competing with the Treasury, the US Treasury, basically, to some extent, except that instead of having US Treasuries backed by nothing, you have preferred equities backed by Bitcoin, right?
Yeah, and that's a good segue to the latest news, because the last preferred that they issued, STRC or Stretch, is competing directly with short-term treasury bills, right? While the other preferred, you could say, could be anything from the bond market. Now they're kind of attacking the money supply itself. We'll try to explain the best we can this new Stretch product, and by showing slides from Strategy's presentation on that from yesterday. So let's start with an overview of where does this new preferred equity sit in terms of volatility and seniority compared to the other instruments that they have. So Stretch is designed to have a very low volatility. Actually, we'll see in detail what this means, but they will try to keep the price in US dollars of Stretch around $100. And if it's below, they will pull some triggers to bring it back up. And if it's higher, they will pull some triggers to bring it back down. So it's kind of a stable coin as a preferred share. And in the capital structure, it sits right below Strife, and it sits above Strike, Stride, and the MSTR common stock. So it's quite high in the capital stack, which means that it's very stable, but also in case of a bankruptcy, you would get your money back before the Strike, Stride, and MSTR holders here. So that's the first thing. We'll build on that, but anything to add, Yves, on this one?
Yeah, maybe just as the slide points out, right? They right from the start they intend to launch an ATM on STRC, which is interesting because that's the first time they actually announced the ATM at the same time that they announced the preferred equity, and it completely makes sense. And it goes back to my point earlier on the ATM issuance from this week, right?
Yeah, exactly. Okay, so the next one is an interesting slide to show, to compare this new instrument Stretch to Strife, which is the crown jewel of the preferreds that Strategy has issued, and especially in relations to the interest rates, or the SOFR here, which is basically the short-term risk-free rate in the US in that case here. And you can see the correlation when the interest rates come down for Strife, because the dividend is fixed. This means that the price of the share itself will go up as the interest rates come down, and in reverse, when the interest rates go up, the price of the Strife share would go down. At that point, it becomes more attractive to hold treasuries, for example, or less risky to hold treasuries with a higher rate. And that's when the demand for Strife would probably come down if we have a fixed dividend percentage, right? And Stretch is acting in the exact opposite, because the plan here is to have the price of the share fixed at $100. And this means that the dividend moves in tandem with the SOFR rate, or the risk-free rate. So as the interest rates come down, the dividend of Stretch will come down. And as interest rates go up, the dividend of Stretch will go up. And this should allow the price of this preferred to remain stable. So it will act basically in opposite to Strife.
Yeah, absolutely. So here, basically, what Strategy did is that they made a preferred equity with variable dividend based on the SOFR. So that's the secured overnight financing rate, right? As you mentioned, it's a very short-term duration rate. And it allows them to have one of these levers that we mentioned to adjust the price of STRC and keep it at around $100.
Yeah, exactly. And the dividend that changes, we will see that now on the next slide, explaining how this mechanism works. So Different than the other instruments where the dividend is paid on a quarterly basis, for Stretch, it will be paid out monthly. And the way it works is you will have the record date, which is mid-month. So if you hold the shares mid-month, you will be eligible to receive the dividend. And then at the end of the month, the dividends will be paid out. And the new dividend rate will be announced for the next month. So you can see here that the dividend is flexible and it will change month over month depending on the SOFR rate or also on the price of Stretch, right? So if the price of Stretch is too high, they will reduce the dividends, and if it's too low, they will increase the dividends to make it more attractive. So the dividend will start at 9% per annum, and they will be able to change that month over month. There are some rules behind it, however, without going into too much detail, but they can adapt it to the upside without any restrictions as much as they want. And to the downside, it's 0.25% per annum, but they can do that every month, plus the maximum decline of the SOFR rate. So if interest rates get cut by 1%, then they could reduce in that month their dividends by 1% plus 25 basis point on top of that as a maximum. But bottom line is every month they can change the dividend payment rate on those preferreds. Okay, so that was the explanation of what Stretch is. Now to the interesting topic, and also then trying to explain how they want to pull off the fact that this preferred should remain stable in price. The next slide here is interesting. So you can see the target for strategy is to keep this preferred between $99 and $101. So it really should act like a stable coin, or really not lose or gain in value. And here they're showing how they plan to keep this stock within this target range. So if it was to go over $101, what they can do is decrease the dividend rate, of course, to make it less attractive. Then they can issue Stretch via secondary offerings at a price below $101 to bring the price down. They can hit the ATM, of course, to bring it down. And they also have the possibility to call it, which means to basically take it back as an issuer at $101. So given that, I think from my perspective, it should never trade over $101, because you know that strategy can just take it back for 101. Then the downside protection is, I think, a bit more unclear, at least to me, is if it goes below $99 a share, what strategy would do is increase the dividend rate, like we saw before. But here the thing is they can only increase it once per month at the end of every month. So it's not something they can react on very quickly. It would, worst case, take a whole month before they can adapt this dividend. And the second lever that they show here is that they just stop selling Stretch at the market and release any sell pressure through that, right? But here for me it's a bit more uncertain what really happens if it trades below 99, and how much power do they really have to bring it back into the range here.
Yeah, I think the reaction time will be delayed, right? Because as you mentioned, it takes approximately 1 month to change the dividend. I think at some times we might see it trade below $99, and it will take some time until it trades back up. So what's really interesting, in my opinion, here is that you see that the same way that you have the levers for the Federal Reserve, right, to have the issuance of liquidity in general, so they can either hike or reduce the rates, or they can print additional money or call it back. That's exactly the same mechanisms that you see here on STRC from strategy. That's really where you see that they compete with the treasury to some extent, right? And by hitting the money markets bucket.
And I think it will will take some time to stabilize because the market will need to see what really strategy can do and how it trains it in the end. But if they're able to keep it within the range most of the time, it might also be a self-fulfilling prophecy by the market at the end. If it trades below 99, you know that they will react, that they'll increase the dividend, and the shares will be bought back up and to trade within the range, right? It will depend on the trust that the market has in strategy's ability to stay within that range.
Another thing that I'm really curious to see is how big the ATM will be, right? Because they will need probably a huge ATM to be able to issue all of these STRC preferred equities into the market to decrease the price. And as mentioned, probably as I feel like it's going to be one, if not their major preferred equity that they will be issuing.
Yeah, will be interesting. I have no opinion on that and no idea how it will be. Just as a reminder, we had the crown jewel Strife has an ATM of 2.1 billion. Then Stride, which is a junk bond, has 4.2 billion, and Strike is at 21 billion in ATM capacity. So it will be interesting to see what the ATM is on Stretch. It hasn't been announced yet. So yeah, I think this will also tell us what their thinking is behind that one. And maybe they don't know yet either, and they're waiting to have this initial offering done, see if they're oversubscribed, see what the demand is for such a product. Because again, this is something that's completely new to the financial markets, this type of preferred shares. Probably also a lot of uncertainty of how it will trade or how the market will receive it.
Yeah, that's a great point. And right now they're programming to issue 5 million shares of STRC. So that's around 500 million USD worth, right? And let's see if it gets oversubscribed, because that's going to probably indicate to them what kind of ATM they actually should put out there.
Yeah, and that's a great segue to the next slide here is what is the potential market for this new preferred? And the answer is basically all short duration credit assets, which is any money that is sitting on a USD bank account, which is around 18 trillion. Then we have the money market funds, around 7 trillion, and short-term treasuries, around 6 trillion. And then there's some commercial papers and stable coins that make out a smaller portion, but could also be a market that they tap into here. And you can see on the very right bottom corner what this initial 500 million issuance is of Stretch. It's tiny, so it's a big market that they could tap into. And if they also here, if they get 1 or 2% of it, which given the higher yields compared to all of those instruments, it should be doable, right? And a lot of room to grow.
Yeah, absolutely. And what's amazing with this is that now, as mentioned, they're tapping into this new bucket. So the money market, which is a separate bucket from the fixed income. And the money market, there's assumed pool that they can tap into, right? But if you look at the whole of the money market, and I think we will show it a bit later, it's 120 trillion in total. So it's also not a negligible part of the whole wealth in the world.
Definitely, because this looks at USD bank accounts only, for example, but it might be attractive for many other jurisdictions or other currencies as well.
Yeah, I mean, they say that they are competing as well with stable coins here, and stable coins are used all over the world, right? That means that there's potential to include this in other jurisdictions, not just the US denominated jurisdictions.
Okay, one last thing on this topic. We've shown this overview before with really all of the wealth in the world where Bitcoin sits within it with the 2 trillion. The preferred shares that we had so far, Strife, Stride, and Strike, that are pulling liquidity from mostly the bonds market, right? We did argue that potentially also from real estate or equities, high dividend equities, they would be pulling but mostly from the bond market. And this new preferred stretch is pulling directly from the money market. As we said, the money market funds, cash sitting on a bank account, if they really are able to pull it off and keep the price of the share stable, it will pull more and more money out of the money market. So that's an additional pool of capital that they're tapping and basically recycling directly into Bitcoin. Okay, let's move to the next one here on the Bitcoin dividend coverage slide. I think that was important to show again, just to show what the exposure is of strategy with those new products. Again, 500 million on a fourth preferred share. And what does that mean in terms of their risks and their ability to make good on those dividend payments, right? And this show puts it in perspective, right? With the current value of their Bitcoin holdings at 72 billion. Then they have some out of the money convertible bonds. That is a liability that they still have of 5 billion. So if you take those out, you end up with a net Bitcoin coverage of 67 billion on their balance sheet. And you divide that by their preferred dividend obligations of 370 million currently. And you see that in the worst case scenario, they could pay those dividends for the next 180 years. And that's assuming Bitcoin stays flat, right, and doesn't appreciate in value. They also show that if Bitcoin were to crash by 75%, from today's prices, they would still have 26 years of runway and ability to pay those preferred dividends, right? So very far from getting into trouble with that. Of course, it will depend also now on how much ATM and how they scale those preferreds, and those dividend payments will go up with time, of course. But then again, also will their Bitcoin holdings, right? Because any proceeds they make from issuing those shares, they plow right back into Bitcoin. So also their coverage is going up with the issuance of those. Okay, so we've shown this pyramid before. This is the capital stack of strategy with all of their instruments. Here it shows the long-term target of their capital structure. And what's really interesting to see is at the top of the pyramid, we don't have the convertible bonds anymore. It goes straight to Strife as their crown jewel. So it means that they probably don't want to issue any more of those convertible bonds that they have so far. So a switch in strategy and really concentrating on those preferred equity instead of convertible bonds in the long term here. The second thing you see is this new product stretch that sits between Strife and Strike on the capital structure. And the plan is for them to have a BTC rating of 10x or more on both Strife and Stretch, which means 10 times over collateralized here. And to have those products as investment grade equivalent, backed by all the other instruments that sit below it, with Bitcoin and MSTR at the bottom of the structure here.
Yeah, just maybe to come back on one of your points before about the convertible that Saylor actually mentioned in one of the podcasts. I think it was on Joe Burnett's podcast, that if he had to do it again, he wouldn't do it with convertible bonds and go straight with preferred equity. So clearly a strong signal that he's probably not planning to do any convertible bond anytime soon. And I believe also in the presentation for STRC, he alluded to something like that. So I think it's quite clear that they're not looking to issue any convertible bonds anytime soon.
And reduces their risk too, right? By not having any debt with a maturity date, because all of those preferreds, they don't have a maturity date. So the only liability that they have is the interest payments or the dividend payments, the yearly.
Yeah, exactly. And I think another point is that the convertible bonds aren't as or they have a lower torque, as Saylor would put it, right, on it. So So it's not as accretive as the preferred shares. It was a good tool to begin with and to strap the whole strategy. But as they go to the next level, obviously the preferred shares are now taking over.
Yeah, and it will be interesting to see if they come out with any additional preferreds. This pyramid is getting bigger and bigger.
Yeah, it's getting stacked there, and I'm sure they will, right? I mean, they have to at some point, as we mentioned before, right? For example, when MSTR hits 1,000, then STRK probably is no longer or might become obsolete. So they might need to come up with something new instead.
Okay, so this is all the slides that we wanted to present to you on Stretch. Maybe just to summarize what we've talked about. So Stretch, the new preferred equity that strategy just announced. They will issue initially 500 million worth of it and then announce an ATM that we don't know yet how big it will be. This preferred sits on the capital stack between Strive and Strike. And it will have a flexible dividend payment to make sure that the instrument itself remains at a stable price around $100 per share. The main goal of this new product will be to tap into the money market funds, potentially also savings accounts denominated in dollars, which we saw is a huge capital market to tap here.
Yeah, it's going to be quite interesting to see how it's used, right? Because potentially what we can see on Stretch is when the bear market comes, Bitcoiners that want to go more on the safe side, they might want to allocate a little bit on Stretch, right? So the Bitcoiners might use it a little bit as their bank account, right? Where they can store a little bit of dollars for their everyday use and still get a bit of yield on it, depending on how far they're looking into, right? To store it for 1 or 2 months or 3 months, depending on how they do it.
Yeah, that's a great point. Anybody taking profits, that's what usually the smart traders or the OG Bitcoiner have been doing in previous bull markets, is to rotate out of Bitcoin, right, and to distribute their coins on the big leg ups and get liquidity and then buy back in the next bear market. And now instead of just holding the cash, they could park it in Stride, which is basically cash equivalent but with a dividend. But this would also mean that strategy gets a lot of additional capital to plow back into Bitcoin. So might also have an impact on the bear market floor.
Yeah, exactly. And then we go back to what Saylor mentioned, right? Winter is canceled. So really hoping that that's true. But also another thing to point out, right, is usually, obviously, I mentioned Bitcoiners for a reason, because I don't think that the normies wouldn't allocate their dollars into Stretch when there's a bear market, because the sentiment would be negative. And we've seen that usually all of this is driven by sentiment, at least till as of today. I don't see a lot of again, normies doing this. So potentially, I don't know if Saylor will have the capacity to keep issuing more preferred equity. All right, let's shift gears a little bit away from strategy and moving to other big news of the week, mostly coming from the blockchain group, which has now rebranded to Capital B. The rebranding has a lot of significance with Bitcoin and Satoshi, which I love. They also announced that they will be creating a subsidiary in the UAE. So that was actually also very big news, in my opinion. I'm really curious to see what else comes out of this and how they plan to go ahead with this. Additionally, they also have, by the end of the month, but this has been mentioned before, they will have this US ticker, right? So this OTC ticker in the US. And maybe here could be interesting to have a look at what the other companies, such as the Smarter Web company, has had in terms of volume. We're presenting a chart with the weekly traded volume by region for the Smarter Web company. And this was provided by John Levi. So make sure to follow him on X. He provides also some interesting data. So kudos to him. And here you see the different volumes per week. And what is really interesting and what pops out is that on the week of the 9th of June, you basically see that the volumes double thanks to the traded volume in the USA. So the initial volume was coming mostly from the UK. And once they got their OTC ticker, suddenly just doubles. So I'm really curious to know if this also will impact the same way capital B.
Yeah, that's very interesting to see, and it shows that it does make sense for the Europe-based companies to have a US ticker to increase their exposure and the volumes.
Yeah, absolutely. And another company that has done that actually is H100. And they've seen also, I would say, a quite significant rise, right, in terms of their share appreciation. So I think, yeah, capital B right now is although the price action on the share lately has been compressed, but that's been the case for almost all the Bitcoin treasuries, I think, over the last 1 or 2 weeks. But the announcements and this new OTC ticker from Capital B should be quite bullish news for the stock price.
Do you know when they start trading in the US?
It should be by end of month, so in approximately 1 week. So maybe just some final words on Capital B. They also had an interesting presentation from Alexandre Lézé. Also, their website completely changed, and they also now have a really cool analytics page. So make sure to check that out if you're into Capital B. Yeah, because they are actually partnering with the Bitcoin strategist on X. They're called at Bitcoin Power Law. They make great charts, right? Overall. So again, make sure to follow them as well. And I think they did a tremendous job on this as well.
Yeah, and you can really see that Capital B is trying to copy what works from strategy. The way Alexandre Lézé has presented his update, the way they're increasing transparency with their metrics and their rebranding, everything is very similar to what strategy is doing. Let's not forget they're in the European market, right? So they are filling a gap that strategy cannot currently, and it will be interesting to see which products they also come out with, like preferred shares. I don't know in what sense this is possible on the French markets. The reason why more than one of those companies can be successful is, as we mentioned in prior episode, it's because they all tap into different markets and capital pools in the end.
Yeah, no, exactly. And I love also the fact that they're going to the UAE. So I don't know if it's a super huge market to tap into, but just the fact that they're expanding, I think is a great move. And yeah, I think that what is also interesting is that Saylor already had mentioned that there was going to be a Bitcoin treasury company in the UAE. And I'm fairly certain he was referring to Capital B because, yeah, this has been probably in discussions for a little while, right? So great.
And those companies get the attention of their local markets. In Alexandre's presentation, you see that ALTBG is the best performing stock on the Paris exchange. So must be getting attention as well from the local players here.
Absolutely. I think he mentioned in one of his interviews that he was getting a lot of requests for investors. What is really interesting, and I thought that was really cool from his side, is he was transparent saying that these investors are not always fully aligned with the vision of, well, Capital B now, and that they because they weren't fully aligned, they had to decline some of these, what they could have gotten from these potential institutional investors. And I think overall the messaging that Alexandre has put out is as good as Sailors, as good as Dillon's and Simon's for MetaPlanet. So for sure, these are hard contenders on the European side with Alexandre. All right, I think we covered it quite well on ALTBG, so let's start wrapping it up here and move to final thoughts. Quentin, you want to go first?
Yeah, so from my side, I think what is still astounding to me is the pace at which strategy is accumulating those Bitcoin. And if you just look at the broader market, the Bitcoin treasury companies and the ETF combined in the last year and a half, they accumulated 2 million Bitcoin, so 10% of the overall Bitcoin available, or that will be available when everything is mined. So it's mind-blowing how quickly they accumulate, and it looks like it's not slowing down. The ETF flows are high. Strategy, after we were impressed last week with their 400 million buy, they impressed us a bit more with 700 million this week. And you never know what comes next with this new preferred. That will be another 500 million hitting very soon, next to all the other ATMs. So at some point, the price of Bitcoin will have to go up to find new sellers. I don't see another way currently. So interesting times ahead.
Yeah, no, couldn't agree more. And just maybe to piggyback on what you were saying is we've seen over the last couple of weeks, I think a couple of whales dumping up to 80,000 Bitcoin, and these things get gobbled up in no time. The price barely reacts. I think that's quite amazing, and I think most of us are a bit oblivious when we think about it, right? Exactly, like the amount of Bitcoin that's just being gobbled up is crazy. And what is even more crazy is that we haven't seen some of the bigger players enter, right? So 21 Capital, Nakamoto, you have the pumps back, ASST, so Strive hasn't come into play. And all of these already have some deals, and they have basically some of a few 100 million in cash. Once they start gobbling up as well the Bitcoin, which should happen, we've heard from Nakamoto, I think at the end of August, and probably the other ones around September. That's going to be, as you mentioned, really interesting times, right? So yeah, looking forward for the next few months, because yeah, there's still a lot of runway, right?
Yeah, and maybe just one thing to add, all the companies you mentioned, that's the pure Bitcoin treasury company plays, right? That are trying to find other creative ways than strategy to accumulate Bitcoin. But I think what also could be interesting, seeing the success of those companies on the stock market and in general, is that other companies that have a bigger cash flow and operating business start allocating more of their treasury into Bitcoin, not necessarily to get leveraged and issue financial products to buy Bitcoin, but just simply using Bitcoin as their savings vehicle instead of putting it into treasury bills, money market funds, or acquiring companies at too high prices, or buying back their shares, or paying out high dividends. I think once this starts and bigger players also start to really accumulate Bitcoin, then it's game over.
Couldn't agree more. All right, then. Thanks for listening. See you on the next one. Cheers.
Bye-bye, everyone. See you next time.
How many chairs are you sitting on right now?